there is one thing which most people get completely wrong about trading. Now, I usually only trade crypto, but I can also recommend the same rule or the same strategy for forex traders as well and for stock traders as well. But one thing before getting into trading, if you're a complete beginner, you have to realize is that 80 to 90% of the retail individuals like us, we make up these markets by head accounts, which means that we are the ones trading on these platforms, or we are the ones who are mostly involved into a coin or into a stock, or you can say in forex as well. Basically what really happens is that uh, let's say that if a coin has 2000 holders, out of these 2000 holders, 1900 of the holders will be people like us, the retail individuals. But the rest 100 people will be those who are probably institutions, who are probably hedge funds, and who are probably the elite or the richer guys who have millions, if not billions of dollars to invest into these categories or into a stock or into a particular coin. Which basically means that out of 100 crypto traders, only 85 to 90% of these traders are retail individuals like us, and the rest 10 to 15% are probably these institutions which I have already talked about. But if we get into the main part, that is adding volume and adding capital to these categories or to a particular coin or to a particular stock or to a particular market, you can say, we don't really add up much. We only add up like 10 to 30% if we are talking about crypto. But let's say that if we are talking about the current you can say market right now, which is Bitcoin crossing its all-time high, Solana is at 200, Ethereum has crossed its all-time high, we are not adding much value to these markets right now. That is the real truth, and you can go on Glassnode and see the actual datas. The addresses are significantly decreasing, especially on these chains, but the price is just going up for absolutely no reason. That is because institutions and these hedge funds are actually adding volume to these coins. It is not people like us who are actually buying Bitcoin or who are actually buying Ethereum. If we were to buy Bitcoin, we would have bought it at $16,000 or would have bought it at $20,000. But of course, most of people like us, we literally just FOMO into traps, and that's why we lose a lot of money. And that is the major reason that out of these 100 crypto traders that I previously mentioned as an example, only 85% make up the markets, and which is the retail individual like us, which you can say is the have the head accounts in these markets. And the rest 10 to 15% are those guys who are then controlling the price action of these markets. Let's say Bitcoin is now being controlled by these institutions, by Bitcoin is now being controlled via these hedge funds, and basically it is something which is said to be decentralized, whereas it is not really that decentralized right now, because no new addresses are being added currently. If we talk about when Bitcoin was at, let's say, seven, almost like $16,000, you can say the amount of new addresses that were added to Bitcoin, I'm talking about 2017, 578,000 addresses were added. But if we talk about Bitcoin being at 120k, only 326,000 addresses are being added, which means that there are not a huge gain in the number of new addresses, or not a huge gain in number of the active addresses on this network. Now most people will actually debate that the amount of active addresses should not significantly increase. That means that people are getting online, they will probably sell their Bitcoin. Whereas I think that their opinion is also completely right, but I also have an opinion that if people are using the chain for its actual purpose, which is it to become a decentralized peer-to-peer electronic cash system, they have to use the chain, and they have to then have an active address, you can say. But now let's get towards the main topic of this video, and that is that people like us mostly just lose money. That's it. Which means that most of the head accounts that are in these markets, in stocks, in forex, or in crypto, we have most amount of the head accounts, we have the least amount of capital, and then there are these elites who are already very rich, then there are these institutions, these hedge funds, and they just basically make a lot of money off of us. Now you have to know one thing, that it is not something which is just being airdropped and that is why you make money. If you are losing money, then there is, on the other hand, there is some guy who is making money. That means that if you bought Bitcoin at $16,000, and let's say you sold it when it just 2x, you can say it went to 32K, and let's say if you invested $100, it became $200. Now if you sell that $200, you are basically taking $200 off of this whole valuation of Bitcoin, which means that you are taking $200 off of this market cap and all, because now you think that it is the perfect time to exit. Now that is the major reason that I don't really trade Bitcoin, or don't really trade Solana, or don't really trade anything. I just buy and just leave it alone. That's it. I bought Bitcoin when it was at 20K, and I never really bought it to sell it at a 2x. I just bought it because I want to just invest into it, because I think that it can actually become something. Now I'm even expecting Bitcoin to go towards $50,000. Now these are my opinions based on the conspiracies that I have created. So it doesn't really make much sense for you to actually adopt into my conspiracies, because I think that Bitcoin's main purpose is actually gone right now, and it can even come back to 50K. But I'm still not selling Bitcoin. Not really a day trader. I'm just buying into this currency just to basically believe into the ideology, or the idea of the creator himself, the Satoshi, you can say. Anyways, coming back to the main topic, what most people don't really understand is that if we actually go ahead onto the chart, all of the people who end up, you can say, analyzing the charts are basically analyzing the previous data, the previous psychology, the previous fundamentals, and the previous everything to predict a newer price, which means that if Bitcoin were to add $116,000, for it to break $116,000, it is not completely dependent on support or resistance and all, you know, because this is all of your previous fundamental data. That's it. That is how people traded, or people traded this price action precisely previously. That is history. Now you're just tracking the history to predict the future. But let's say how you can eventually predict future if Bitcoin is at 20K, and you are predicting for it to go to 125K, which it has almost went. For you to predict Bitcoin to go to 125K, you have to have a very deep knowledge of its fundamentals. You have to have a good network that is filled with these knowledgeable people who actually are not just going support resistance, boom boom boom, RSI indicator and all that bullshit. They are not just yapping around. They are giving you actual alphas. They are giving you that Bitcoin can pump, because I have heard the news that BlackRock is now investing into Bitcoin, and that is what I have heard. That is what almost all of the internet heard. What you just have to do was just had the notifications on this Forbes channel, just to have these notifications being received via your email address. That's it. And when I heard the news that Bitcoin, that BlackRock and these hedge funds are now getting into Bitcoin, I just invested into Bitcoin, thinking that it will pump. And even if it doesn't really pump, I don't face a lot of loss here, because at 16K or at 20K, the idea is very undervalued. Because as you can see, when I showed you guys that the new addresses being added in 2017 at the price of $16,000 were almost 600,000 new addresses, and now it is at 123K, you can say, when it peaked. And the active addresses, the new active addresses that were being added, that are probably the retail individuals like us, that is 326,000. Now this makes me think that the price right now is very overvalued, and this just makes me think that the price can now go towards even 50K. And now that is some on-chain analysis that I just showed you. But on-chain fundamental, or this trading analysis, whatever you want to call it, this pattern reading and everything, these using indicators and everything, is completely useless if you're not understanding how the psychology works. That's how simple it is. Meme coin trading, building new platforms, marketing it, any sort of trading, stocks, forex, or anything, it is completely dependent on the psychology of these people. Now if we get back into this, you can say, the trading patterns, over here I can show you guys that this is people's psychology, and this psychology is now history, and you are predicting the future by relating it to the history, you can say. But if we now get into the main topic of this video, that is the psychology and how to basically understand these people's psychologies. First is that you don't really need to have a deep knowledge of this trading analysis, these trading chart patterns analysis, what you call it, the technical analysis, you can say. What you need to understand is that for you to be early, you have to be very open-minded. People who made money off of Dogecoin, or people who made money off of Dog with Hat, or people who made money off of Chainlink, or Bitcoin even, or Ethereum or Solana, they were very open-minded. They were like, okay, so this is something which can, uh, like let's for a second consider Dogecoin. They understood the lore behind that coin, they understood the narrative behind that coin, because they were like, okay, so there was this stock called GameStop which was pumped by Roaring Kitty, the dump money story. You can search it up on Google, or you can watch a complete movie on that. There was this dump money whole movie about it, where this guy named Roaring Kitty just shelled a stock called the GameStop stock, which was about to just completely die, you can say. Hedge funds were literally shorting that stock so they can make huge sums of money off of it, meaning that that whole company was going to bankrupt. But what happened was that this, you can say, streamer, he just made a Reddit community and they just pumped GameStop for absolutely no reason, no utility, no nothing. The company is filing for bankruptcy, hedge funds are shorting it, and the absolute anti, you can say, the absolute opposite happened, and they made a whole sum of money off of it. And same happened with Dogecoin. Now people were like, oh, okay, we get like, there was a coin like the GameStop stock, and then there is this Dogecoin which has no utility, which is just a meme coin. Who knew that Elon Musk is going to promote it? So this is something which you need to understand, that you have to be very open-minded. Let's suppose Dog with Hat, or let's suppose Ethereum at this current price, or let's suppose Solana. Now, when Solana was at like I think $8, I remember people saying that it is not going to work out and this chain will probably, just be gone, because we know that it is giving us high TPS, and it is giving us a lower gas fees, which is sort of, which can be utilized, but it is less decentralized. So it is better to use Stripe and all of that. But who knew that there is going to be a whole meme coin season meta on Solana that will encourage developers to come on Solana to make new D apps and all. So that is a very huge deal. For it, you need to have some sort of gambler's mindset, and you have to be very open-minded as well. Let's for a second consider Ethereum. Now if I show you right now, I actually came across this tweet right now, where Ansem said that Ansem is the biggest crypto KOL out there right now. Ethereum will never trade above $4,000 as long as I live on planet Earth. And it is a very recent tweet, by the way. And now Ethereum is above $4,000. This is the guy who actually promoted Dog with Hat a lot and made millions of dollars off of Dog with Hat. Aiden Ross lost over $40 million selling Ethereum at the bottom at $2,300. Basically, these are just two fumbles that I'm showing you, which are by the biggest guys, you can say, out there, and they have fumbled a lot of money, you can say. But again, there are some times where a guy can be wrong, and there are some times where a guy can be completely right, and it is completely fine for you to be wrong in these markets as well, for you to become the exit for these rich guys out there as well. But what you can do to decrease is to reverse engineer your psychology as a common man out there. Because when I'm going to invest with a bigger capital into some of these, you can say, these meme coins and all, what I basically do is to join their X community or their Telegram, because I'm investing into that coin for a much longer term. Like there was this play out there called BTH, Buy the Hat, and then there was this coin called uh, you can say Sanchan, and then there was this Clippy coin, then there was this Tokabu coin, which I recently invested in. I also invested into Bonk, but that investment was purely dependent on fundamentals. I've made huge sums of money by just catching this whole psychology of these markets. Now, what really happens is when you're into an X community of this meme coin, when people start just flooding the community, there are basically two things happening. First of all, no one will actually fund their own bags, which means that now the FUD is technically happening, so these people can buy. So some of these people with higher money or higher capital can buy at a much lower price. Second is when there is when there is this huge shill all around the space, which actually happened with this coin called BTH, what when went to almost 20 million or little above 20 million, and I have actually bought that coin at 2 million, which means that on like I was a top holder of that coin as well, which means that I almost got a 10x, but I didn't really sold that coin. I sold it at a 5x, but I still have a lot of holding into the coin as well, which means that even I am wrong sometimes, because now that coin is at 3 million, but I still think that the coin can pump to over 30 million right now easily. Coming back to the topic, I've betted onto these coins first of all by understanding their fundamental, and second is by reading the psychology of these people. Because if the psychology is not being, you can say, not being synced with the trading pattern or the trading charts or the technical analysis out there, then that means that there is something wrong. If there is FUD around the X market or the X community, you can say, sorry, why did I call it X market, X community? What is happening is the coin is just pumping. There is a small little dump and then it pumps back again. That means that that FUD is for absolutely no reason. And if there is a shill in these X communities and that coin is just dumping, that means that that shill is probably the FUD for this community, and now the top holders are probably selling it. Now these top holders are actually known as the PTMA wallets, the professional traders or the market insiders, you can say, probably in these meme coins. Now, for what I have actually realized in this Sanchen coin that I recently, now the trades I'm talking about are the trades that I recently took. This Sanchen coin was doing good, and some even replied to one of their tweets, and they actually shielded to Elon, the founder of PumpFun, which means that fundamentals are right for now. That coin was at 8 million and it was not pumping at all, which just made me realize something, that if it's not pumping, that means that uh, they are probably doing something wrong, because or they are probably waiting for more people to get out. And that is what happened. When most people just got out of this coin, there were just big god candles that literally pumped that coin to almost 30 million in one day. So by reading the psychology of these people, you can pretty much understand what is happening. But there is one thing that you need to do by for reading the psychology of people, that is to reverse engineer your psychology, which means that if you want to sell at a particular point, and if you are not seeing people sell at that particular point, that means that you should sell now. If people are just buying at a particular point and it is just pumping, and if you don't want to buy at that particular point, then you should not buy at that particular point, because that means that at that very moment most of the retail individuals are not involved, which means that that trade is certainly a very risky trade for you. Sometimes these trades even work out, because there is this almost this 60-70 or 70-30 chance out there, you can say. So anyways, this is a video on basically psychology, on how you can understand it. So whenever there is actually this fear greed index where the fear is like 70%, the greed is only 30%, I usually just buy in a lot there, because I understand that if institutions are betting on this coin, there is not a war going on right now, and there is not much of this bullshit going on right now, or even if there is this Israel war or this Iran war, and it didn't really dump Bitcoin to what it was supposed to be dumped, because if you relate it to the stock markets and all, it is not dumping as much as the stock markets have dumped. That just makes me think that there is something happening, which means that now people who are in charge of Bitcoin are probably selling some of their stocks, using this opportunity to further that market so they can buy low there as well, and they can buy Bitcoin as well. Now these are just some conspiracies that I just create in my mind, and somehow they work out as well. So I basically just buy a lot there, because I'm not seeing a very significant dip. Even though the news is big, the dip is not very significant, and the coin is just still pumping. That just makes me think that there is something happening wrong. So whenever you are actually trading, you just don't have to do some on-chain analysis, fundamental, or just technical analysis. You have to read what's actually happening, because let's say let's consider the current market scenario here, and that is this Bitcoin being dumped to 111k, and it being insta pumped, you can say, towards like from 110 to like 118. Even though you can say that this is not a very huge pump, that means that billions of dollars, hundreds of billions of dollars are being added to Bitcoin within just like few of these 3-4 candles, few of these like 30 minutes 3-4 candles, that just makes me think that there are these huge elites buying right now. These are these huge whales buying right now, which will probably not sell it. So what usually happens is these people just hold in their holdings, and then these are the ones who are the retail individuals. They are just basically selling their holdings, taking out profits when there is no significantly huge news, because these people are usually market insiders. They know where to buy, they know where to sell, they know that when there is actually a news which is concerning out there, they just sell that. And that's why you see a huge significant dip out there. These are not retail individuals like us selling, and then there is a dip. Now I knew that you can, what you call it, the support and resistance level, that it will actually pump from here. It will actually the pump from its previous support, because these elites have bought in, and that's what happened. It now is at $123,000. So one thing that I'm going to recommend to most of you is to invest into these coins by reading people's psychology as well.